NVIDIA stock has experienced quite a roller coaster ride lately. It's been up, down, and all around, leaving investors wondering where it's headed next. Today, we're diving deep into the world of NVIDIA to make sense of the recent chaos. Strap in because we're about to dissect the events, trends, and expert insights to answer the burning question, is NVIDIA stock on the brink of a drop? First of all, NVIDIA stock took a different direction, shifting gears and crossing over the 50-day simple moving average temporarily on August 10th. Well, it was all because of the U.S. Consumer Price Index for July. The CPI didn't match what everyone was expecting, and this unexpected result boosted tech stocks. And guess what? The NASDAQ composite got in on the action, too, leaping up by a whopping 1.6% on the back of this news. Breaking it down further, let's talk numbers. The core CPI increased by 4.7% year over year, while the headline inflation saw a 3.2% year-over-year increase. Now, what's interesting is that both of these readings fell short by 10 basis points when compared to what the experts had predicted. A day earlier, I faced a significant setback. This setback resulted in a 4.7% drop in their stock value. The cause? News broke that U.S. President Joe Biden had wielded his pen to sign an executive order, ushering in new restrictions on investments by U.S. corporations. What's the target of these restrictions? Specific Chinese high-tech sectors that just so happen to form a crucial part of NVIDIA's market. This executive order, freshly minted by the Biden administration, packs a punch. Its aim was to rein in U.S. corporate investments in key areas of Chinese tech. Think of semiconductors, microelectronics, quantum tech, and artificial intelligence. The Chinese Foreign Ministry didn't mince words, expressing strong dissent for these stricter rules. The White House intends to create a safeguarding program to prevent foreign nations from exploiting U.S. investments in a specific group of technologies. These technologies are deemed vital for their military, intelligence, surveillance, and cyber capabilities, all of which pose potential risks to U.S. national security. As conveyed in an official statement, this move seeks to prevent any detrimental consequences that could arise from these strategic technological areas falling into the wrong hands. In addition, the Financial Times has brought to light an exciting move by major players in China's consumer internet arena. These heavyweights, including big names like Alibaba, Tencent, Baidu, and ByteDance, seem to be strategizing ahead of a potentially tighter regulatory environment. Their strategy is ordering a whopping sum of over $5 billion worth of NVIDIA chips. These tech giants are on a mission to stockpile these chips, and they're not holding back. Each has placed orders exceeding $1 billion for NVIDIA's A800 GPUs. These chips are set to be delivered throughout 2023. But that's not all. Looking ahead to 2024, they already have orders for another staggering $4 billion worth. NVIDIA came up with the A800 chip last year, aiming to sidestep the regulations from Washington concerning cutting-edge semiconductor technology bound for China. Unlike its counterpart, the A100, which finds its home in data centers for handling intensive computations necessary for training complex AI models and other generative technologies, the A800 operates at a somewhat slower transfer rate. This strategic move by NVIDIA highlights its response to regulatory challenges and the delicate balance between innovation and compliance. Morgan Stanley's team recently shared their insights, suggesting that the AI rally we've witnessed this year might be entering its later stages. They pointed out that NVIDIA and other major AI-focused stocks have more than tripled their share prices since the beginning of the year. Led by equity strategist Edward Stanley, the team highlighted that this surge has already outpaced other smaller market bubbles, which usually see gains of around 150% over 3 years. In simpler terms, they hint that the rapid growth we've seen might be slowing down. This could have significant implications for investors and the future trajectory of NVIDIA's stock. But before we continue, we want to thank you for watching this far. As I mentioned earlier, the NVIDIA stock closed below the 50-day simple moving average or SMA on August 9th. It had consistently traded above this moving average since January 9th, giving us an excellent 8-month upward trend. Now, it's natural for a stock to take a breather after a continuous climb. This consolidation could be seen as an opportunity for potential investors. Right now, the stock is hovering around the $460 price mark. Interestingly, this level served as a point of resistance on May 30th, but later became a support level during June and July. Another notable support level was around $400, where the stock found a base on various occasions between May 30th and June 26th. And if we look further down, there's a range between $373 and $378 that can be considered a zone where demand tends to pick up. Now, people are buzzing about Jim Cramer's recent spotlight on NVIDIA. The well-known TV personality spoke highly of NVIDIA on CNBC, praising its second-generation AI-powered Grace Hopper superchip. Even though the company's stock has already surged threefold in 2023, Cramer remains optimistic and believes there's still more potential for growth. However, there's a twist in this tale. There's a group known as the inverse Cramer crowd who believe that whenever Cramer endorses a stock, it's a sign that the stock is doomed to decline. It's like a cardinal sin for them. Just because Cramer picked it, they expect the opposite. Adding to the mix, NVIDIA's CEO, Jensen Huang, made a bold statement. He proclaimed that NVIDIA's AI technology, powered by its chips, is set to revolutionize computers as we know them. According to Huang, these large language models represent a new computing platform. After over a decade and a half, a fresh computing paradigm has emerged, driven by the ability to program in a more human-like language. This, he emphasizes, will result in a whole new way of processing information for computers. Meanwhile, the folks over at Finbold predicted something interesting after NVIDIA's stock hit new highs. Just a couple of weeks back, they hinted at a possible step back in the stock's price. They even threw in some numbers, $435 and $400 as levels where things might take a breather. And guess what? The first of those numbers already happened, but it didn't quite hold the price steady. If you peek at the daily chart, you'll spot something called a descending channel for NVIDIA. Don't let the name scare you, it's actually a pattern that tends to be seen as a good sign. The twist here is that it could mean the price might bust out of this pattern and go higher. Right now, the price sits at $425, and that's right where the 50-day simple moving average hangs out. Think of it as a short-term support buddy, but wait for it, things might not be all sunshine and rainbows. Depending on how other AI stocks behave this year and the global situation, the stock could take a detour down to the $350 range. Furthermore, Citi's analyst, Atif Malik, remains optimistic, sticking with a confident prediction of $560 for NVIDIA's price and emphasizing the chip's upgraded memory. This move is considered a preemptive step since competitors like AMD are preparing to introduce more memory within their upcoming MI300 GPUs. What's more, Malik applauds NVIDIA's strategic drive to democratize AI. Their innovative offerings, like the NVIDIA RTX 8th generation GPUs and NVIDIA AI Workbench, aim to make AI accessible, spanning across various scales, from personal computers to large data centers. In the recent update from TipRanks on August 9th, 3 analysts chimed in with their price targets. Citi and Bank of America analysts set their sights above $500 for the next 12 months. On the other hand, one analyst aligned their mark closely with the current price of around $460. Summing it up, the collective analyst consensus strongly leans toward a buy rating for NVIDIA stock. The data from the past 3 months shows 30 buy ratings, 2 holds, and 0 sells, which paints a clear picture. And if the average price target of $506.72 per share is any indication, the potential upside could be around 19.23%. So, as NVIDIA's stock journey unfolds, it's natural to wonder about its next moves. Are the signs pointing towards a potential decline, or is there more room for growth? Do you agree with analysts' predictions, or do you have a unique take on where NVIDIA's stock is headed? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about NVIDIA stock, I highly recommend watching this fantastic video. Just click this video right here and enjoy. Thank you for tuning in and happy investing.